All right, everyone, here we are with another video with Invest for Tomorrow, and we're going to talk about Nndm stock, ticker symbol Nndm, Nano Dimension. And before we jump into this chart, I want to say welcome to all the first-time viewers and investors. Welcome to the channel, Invest for Tomorrow. To all the subscribers, welcome back, and stay tuned on in towards the end of this video. I have so much information to cover with you guys about the S&P 500 index. We're going to talk about the 10-year Treasury again, and we're going to briefly touch on what Jerome Powell, the Fed, chairman, has stated and what the Federal Reserve is responding to everything that's going on. I highly encourage every single investor and viewer, even if you don't have the time, stick around, put on your headphones, walk around while you're listening to this, or just listen to it. You don't have to be watching the screen. Just listen to what I have to say, because there's so much information to be aware of. Now, if you're able to watch the screen, even better, because we're going to look at when I started talking about the S&P 500 index and when we started to see signs of a correction or a crash, We still don't know yet exactly what we're in. We need to see what the bottom is and so forth, and no one knows that, but we're in the midst of it, and this is the time to be aware and prepared. So stick on tuned till the end of this video. Stay tuned till the end of this video. I don't know why I said stick on tuned, but stick around. So here we are. Nndm, Nano Dimension, downward trend, It dropped, and we have a new support level, we have a new resistance level, and we're sitting in the $7 range. Now, we're going to look at how Ark Invest has reacted. We're going to look at everything in the chart, and I'm also going to share with you guys the other support levels to be aware of based off the history of the chart. Okay, we've been talking about this one since it was a little bit below $3 and really picking up traction on more investors being aware of this video that I do daily on what's going on and how Ark Invest has been reacting since this stock was way back at $3. We went through many different offerings, and this stock has hit an all-time high here recently of $18. Now, could it get back up there? Obviously, we have to see how the stock market continues to play out and so forth, but the fundamentals of the opportunity potential of this company, it may be there, but we are seeing a lot of investors actually running out and saying, hey, this is not what I signed up for. I don't want to participate in this anymore. And I've seen it in the comments. And I'm seeing it in the chart. The chart is making it so obvious. So let's look at some comments as well. I went ahead and blocked out the names. I don't want to step on anyone's toes, but I really like to see how everyone is reacting. And it's a really, really cool thing as a community that you can see investor sentiment. So for the most part, a lot of people here are very optimistic, very positive, and excited about what's going on to Nndm because they look out into the future. Also, we don't know everyone's average, so that's why there could be different perspectives. So one says this is in the buy zone, only a change in fundamentals or market crash will bring it down more. And that's a very, very true statement, and we'll have to see what's going on. It won't be much of the fundamentals, but more of a market crash, which we're pretty much in. Now, this will hit $20. The market had a sell-off. Just wait until it flies up. This is totally a possibility, and we are in the middle of a market that is selling off. Now, this person right here, and I really appreciate this comment, which is finding value in my content, stated, I should have listened to you in your other video. I was up nicely with Nndm, but you said it was about to drop in the $8 range. I should have sold for profit when the market opened, but I didn't, and the Nndm went from the second best stock in my portfolio to the worst loss in hours. I am really sorry to hear that. I apologize to this investor that happened to them. Obviously, I'm not here to tell you guys to buy, sell, or hold, and I don't really tell you guys exactly what's going to happen to the stock, but I do tell you guys the cues to watch, and if they get crossed, there could be the possibility of going in that direction. If a support level gets crossed, you need to watch it carefully. Then you have another support level, and then you want to watch the behavior between those two, and then understand from there and make a rational decision. I don't know what your average price really was or where you stand, but I hope that if you are an Nndm, it's because you believed in it and you did your due diligence and research, because I'm never here to tell anyone to buy, sell, or hold any positions on any stocks. If anything, I'm here to share with you guys the cues to watch, to have a better understanding of what's going on, and then as investors, you guys make your own rational decisions. Now, we have here holding 5 years plus, need this sell prices to last into the next week so I can load up. So this is one of those investors, and this is how I look at the stocks that I have this type of conviction in. I'm assuming that this investor feels this conviction in Nndm, and when you don't have free cash that's freed up at the moment, but you need those prices that you're seeing so amazing to stick around, and you want to buy more, it tends to sometimes jump up a little bit, or sometimes once you get that money freed up, it gets out of hand, or it does stay sideways, and then you have the opportunity. So this is an investor with the conviction and looking at the future outlook of the company. So I hope everything turns out in your favor, and if it doesn't, well, if you really believe in this stock, make a rational decision of wherever it's at and whatever will work for your portfolio. I averaged down at around 8.5. I plan to hold for years, so I will buy more. I believe in the company, love the technology. That's awesome right there. That's probably someone that has done their due diligence and research, really understands the company, or even if they haven't done enough research and they're still in the works of it and don't completely understand the company, they believe in it. And that's one of the biggest things you want to first have, and then also understand the technology. I guess you've done some research to see how this can impact the future. So that's awesome. And the fact that you're averaging down, that means that you're really buckling down on this one because you believe that it's worth more than where the current prices are. I bought more shares of Nndm. I originally bought at $6. If it goes lower, I'll be buying more. So this person basically has averaged up and is looking forward to average down if necessary. That's a very good way to look at a stock, especially one that gives you conviction. So everyone here is pretty positive about this stock, and the conviction is there. This was the only investor that I guess their average was not too far from the $8 range, or if it wasn't that, it's just that they wanted to take those unrealized profits, and that happens to a lot of us as investors. But I just want this investor to be aware and rethink what's their goal, what's their purpose with this stock, and if it's not one that they see themselves holding for a long time, to make a rational decision on what will work for them if they need to free up that cash. But anyways, you guys are all investors, have a mind of your own, and will understand the charts and the stock and the outlook for your own perspective better than I can. So I'm not here, like I said, to tell anyone to buy, sell, or hold any positions. But it was really interesting to see all those comments, and thank you guys so much for sharing your insights in your positions and goals moving forward. It's really nice to see that in our community here collectively, and that also gives insights to other investors. So here we are with March 3rd. March 3rd was yesterday, 7,247,747 shares in ARKQ. And when we look at ARKQ today for the 4th, right, ARKQ 7,109,171. So when we look at the difference here, that's a total of 140,000 shares. Just a little bit off, but that's a big jump there of letting go and unloading shares. Now, I went ahead and looked at Tesla. They had 541,000 yesterday. Today they have 530,000. So a lot of people say, oh, well, when Ark Invest unloads shares, they're actually reallocating some of those shares into Tesla to buy better stocks. And I'm not noticing that happening very much with Tesla itself. If anything, I've noticed that they've been buying other stocks that I've talked about for quite some time. And most of these have probably almost 2x. And then obviously with the market bringing itself down, they're right now about 0.5% above their regular total price. So almost half the total amount of the original price up. So 50% up instead of 100% up, which is cool stuff. But we'll talk about that in just a moment when we look at ARKW. But yeah, 100,000 shares plus, that's a lot. And as long as this portfolio stays above 7 million, I won't look at it as a red flag. But the way Ark Invest sometimes unloads is pieces by pieces, and then all of a sudden, you know, they start to reload, and it's so like confusing because we've seen them do that with Splunk. They had such a large position, and then they've been unloading, and now they reloaded, and you could see that they're being very sideways with Splunk itself. So we need to see how is it that they're really reacting here, and what's their goal here. And forget about Splunk, but the whole thing with Nano Dimensions. So let's look at ARKW. So ARKW is 6,033,922 shares, and that was ARKW on the 3rd. Today is the 4th, and for the 4th, ARKW on the 4th, 5,877,298 shares. That right there speaks high volumes of how they're reacting. So this needs to stay above 5 million before I start looking at it as a red flag. I will give them that leeway to unload almost 1 million shares, but after that starts to look like a red flag. We need to watch them carefully. We need to see what they think, because just like retail investors and individual investors, sentiment is important to understand why these waves of ups and downs happen, but institutional investors have a big say in how they feel about certain stuff and what they see. So one thing I want us to be aware of is Zillow Group. They had about 100,000 shares not so long ago, and that's already 10x. So that's one example of one of those stocks that they have a high conviction in, and they've been loading up. The other one is Open Door. They had 6,648,000, and let's see here for the 4th if they sold or bought more. I'm not sure, but that's one of those that they've been loading up on. So here we go. They actually went ahead and ended up having a little bit less, about 100,000 sold. So that's one of those that they've been loading up tremendously, and I've been paying close attention to it. Today's one of the first days they sell. But when you see here Zillow Group, they have 1.1 million, and then yesterday in Zillow Group they had a little bit less than that. They had 1,022,000. So they're loading up here on this one big time, and Zillow Group ain't cheap. It's up of over $100. So for them to buy almost, you know, into 100,000 shares, that makes a big statement. But yeah, Open Door, they've been loading up. This is the first time I see them unload a little bit, and that's fine. I just wanted to compare some different ones. But back to Nano Dimensions, they're unloading big time. I think this is one of the first times that they unload so much. So the 50-day moving average here is 879. Anything below it is bearish. Anything above it is bullish. Now, the support level here is 709. Okay? 709 gets broken through. This could be on its way down to newer lows, new support levels, and getting deeper into bearish territory, which we will need to keep in mind and watch carefully. Our resistance is 796. The bulls need to break through that to continue this momentum, reach newer highs and new resistance levels. But keep in mind, if this gets broken through, this is just an indicator for us investors to be aware that the momentum is going upwards, but it does not guarantee breaking through the 50-day moving average and getting back into bullish territory. As always, guys, I hope you guys found this video helpful and informative. Please do so and subscribe. If you're a first-time viewer and investor, click on the bell. Don't forget to do so you don't miss a single video that I post. Share this with your friends and community. And don't forget to hit the like button to let me know you watched this video. Stay tuned till the end because we have a lot to cover with the S&P 500 index, the Federal Reserve, and the 10-year Treasury, and the tweet of the day. So for everyone that has stayed to this point in the video, I'm going to go ahead and show you guys a short clip of a video that I talked about several times, and I wanted every single investor and viewer to not miss out on it And I know that sometimes you guys look at my videos and you're like, oh my gosh, 10 minutes, 14 minutes, you know, and it's really because I put in the effort and time. I know some people say I talk a lot, but I really need you guys to understand. And not only that, but some of you guys might understand everything, but there's a lot of investors and viewers that are completely unaware to what's going on. So I like to break everything down as simplified as possible, and it sometimes takes time, as I'm speaking right now. So all I'm asking for is a minute of your time. The next minute is going to show the date of that video, where we were at, what I drew out, and even though the drawing is not exactly the same, it's going in the same direction, and these are the circles I want you to remember when I talk about the peaks and how the stock market was going to continue to reflect. I also talk about different topics there, which we're going to touch base after the video. So stay tuned and hang on tight. And thank you guys so much for your patience. I hope you guys are learning and that you guys are receiving information and insight that gives you some better understanding of the market. Stay tuned. 39.50, and it's been going down since. So one thing I want us to pay close attention to is if the market continues to build this behavior. This is the behavior that I'm seeing, right? If it continues this, and we're hitting newer lows, and it continues to hit these peaks, right? Then the market is struggling to hold itself up because the repurchase agreements of these dates do not exist right now. And a lot of people don't realize how much of an impact the Federal Reserve's decisions has on the overall market. Like, the only reason why the market's been pushing up higher, it's all the forward outlook and hope, but it's these dates. These dates hold up the market from going any lower or from staying stagnant. It keeps on pushing it. It keeps on creating anticipation, excitement, you know, the speculation and the hope of seeing ticker symbols going up. So I didn't really want to make this video, and I didn't want to have to, but I need to make every single investor and viewer aware that we might be in the middle of a crash or correction already getting started. So as you could see, the drawing is not exactly the same, but we could see the peaks that I was talking about and the direction that we're going in, right? That's what I wanted every single investor and viewer to be aware of. And then I went ahead and slightly talked about the repurchase agreements. Now, I want every single investor and viewer to be aware that if you want to know more about that, I talk about it in the full video, but it has some correlation to do with what we talked about yesterday, which is right here, the Treasury yield of 10 years. It's right now at 1.55. Yesterday it was at 1.47. I told every single investor, add this to your watch list or keep it somewhere where you can search it up or look at it and treat it as if it's the S&P 500, the Dow and the NASDAQ, or the Russell 2000. Many people use these to understand the overall markets, and they're all down, and this is going up. Now, the higher this goes, the more down these can go, but there will be a point where this can start going up, and even if this is going higher, this won't have so much of an effect on the overall market. The reason why it's affecting the market is because it's moving up rapidly and faster than expected, which is putting fear and uncertainty into the markets. Now, I talked about a bigger picture here about this, that this could reach back to 2%. This could reach back up to 3%. And if it kind of stabilizes, the market's going to feel it. But then once everything kind of rebalances, the market can start to pull itself back up, even if this was to go higher, sideways, or downwards, which is what's bound to probably happen. Or if things do change by the Fed, it can really have an impact on stabilizing this or pulling it back down. But as we can read right here, Fed Chair Powell, Fed will be patient, quote unquote, on keeping easy money policy. That means that they're not going to really do much about anything if interest rates go up, and he's going to try his best to keep it near zero, even if inflationary pressures start to rise. So basically, if inflation comes, he's going to try to keep rates low, but he's going to allow inflation to play itself out. And it's bound to happen. It might be coming, and there's going to be a big meeting towards the end of March or April, and we may be feeling some turbulence for the next coming months. Now, Treasury yield is going upwards faster than expected as well. So even if he's saying, we're going to keep rates near zero, rates can have a mind of its own. Even if he wants to keep it near zero, they can start to inflate as well with everything else. And this could have an effect overall on the S&P, the Dow, and the NASDAQ. So we need to be aware of this and not be scared of this. There's two ways to look at the market when it's going down. Actually, a misfortune or an opportunity. So it's all about your perspective, your goal, and this is where you learn that day trading and swing trading is only good while there's a bull market. It becomes a lot more difficult when the market's going down or it's turbulent, and also it's not the true way, in my opinion, of investing. I day trade and swing trade myself. It's one good strategy, but it's not an investor's strategy. A true investor, and I hope I'm not offending anyone or anything like that, but the overall true investor invests long term. You need to invest 1 month, 6 months, 1 year, 5 years out from now. That's what investing is. The shorter the time you are in a stock, the closer you are to gambling or playing a game. Like, that's all it really is. Now, there are strategies to day trade and swing trade that can make you a quick buck as long as you know what you're doing. But to be a successful, profitable investor and minimize losses and maximize profits, you have to be a strategic investor looking for the opportunity, and you have to understand the stocks that you're investing in, because if you don't understand them, don't invest in them at all. So here we are with the tweet of the day. What is the first thing you look for in a stock to find any interest or even considering to do any further due diligence? I look forward to everyone's comments. I will be mentioning what it is that I look for first in tomorrow's video. So everyone's comments were very interesting. I appreciate you guys taking the time to comment, and they were very insightful, not only for myself, but for every single investor over at the Twitter, to see those comments and learn from them. There was some great comments and strategies there. So the first thing I look for, believe it or not, and I'm just going to click on, let's just click on Apple. And Apple is like the highest market cap. But the first thing I look for is market cap. Believe it or not, that's the first thing I look for. The second thing I look for is profitability. How profitable are they compared to their revenue? So you could see here that 25% of their revenue per year is profit. So they're 25% profitable. That's Apple. Now, there's a lot of other smaller companies that make less revenue but more net income, and they're growing really fast. So that's what I like to look for. Those are the two things: profitability and net income, and then the market cap. The market cap lets you know where it's at, how much higher it could go, and also what it's worth today could be double or triple in the years to come, or if you want to say it in simpler terms, tomorrow. So very interesting stuff to really look for in a stock. Those are like the two most simplest things: market cap, profitability, and within that profitability, how much of it is revenue, how much of it is profit, and then divide it to get a percentage of what the profit really is. And you could see it here. It's already calculated about 20%. I said 25, but it's about 20% of the revenue, which means that they are making 200 billion in money coming in, but what's staying in the books is 20% of that. So it's a pretty small percentage for all the movement of money that's going on. But not to say that Apple is not a powerhouse. This is a major powerhouse. It was just to use it as a simple example. As always, guys, thank you guys so much for watching, and let's make some money.